During the year 2022, Bitcoin has faced many setbacks, and many of the biggest crypto investors predicted that Bitcoin will go through more such rough stages in the coming years. But the increase in Bitcoin prices during the last couple of weeks has suggested that the predictions might be wrong and Bitcoin will be rising again in 2023. Different crypto consultants and investors have different speculations regarding to Bitcoin and its upcoming performance. We have compiled the top 5 Bitcoin predictions 2023 of the greatest crypto predictors, all in one video. Watch this video till the end to know what these investors are thinking about the future of Bitcoin. Before moving ahead, make sure to hit the like, share and subscribe button.
Into the crypto corner here, inflation has been a strong reason to buy into Bitcoin, or a big thesis people have pulled out over the years. You need to buy Bitcoin in order to protect yourself against the eventual inflation away at the US dollar. And that sort of thesis broke really hard this last year when we saw the Fed increase interest rates, and then everything started tumbling downhill. Tech stocks, Bitcoin, value stocks, those sort of things. And if we're looking at the larger market right now, we're looking at the federal funds rate going up towards 5%, and we're all wondering how that's going to affect Bitcoin's price. And the federal fund rate is going up towards 5% because they're trying to get inflation below their official estimates. They want to get back towards 2% or even less, I think. And right now, that 6% level is pretty awful. So what I'm looking at when I'm looking at like Bitcoin prices, seeing if this is going to move at all. Last night we had a nice little pump, which was cool to see. But I think it's just going to be pretty choppy for a while. Maybe just give like a little windy price corner talk here for a second. The one thing I want to compare it to is gold, right? So like a lot of investors look at gold, they look at inflation and think those two things should trade together. And gold did rise on this news a little bit, as did Bitcoin, which is cool to see those things move in tandem. So I think just like trotting it out to like a larger perspective, or maybe a larger thesis, is maybe gold and Bitcoin's time is now over the next few years instead of over the last 2 years. Over the last 2 years, Bitcoin really traded like a tech stock, and maybe with actual inflation occurring in the United States, actual inflation that seems to be fairly persistent, Bitcoin might actually have like a tenable claim to that thesis if it can continue to itch up.
Look, we can't definitively say that we've had the very last bit of downward movement. Certainly loads of on-chain data and the various indicators that we use to try and see where we are in a cycle are telling us that we're pretty much at the bottom. But I know from past experience that even when the indicators tell you you're at the bottom, you might get one more lurch downwards. I mean, we got a huge lurch downwards. You might remember in 2020, just before the bull market began, because the pandemic caused everybody to panic and everybody rushed out of stocks and crypto, but then they all rushed back into crypto and the big bull market began. Mm-hmm. So yeah, as I say, you can't rule out another lurch downwards. But as I say, as a trend follower, I tend to wait until I see, really clear signs that we're back at the beginning of an upward trend. For example, on my personal account, I didn't really start buying until we got to about $10,000. And in 2020, the price had previously gone as low as, I think, about, $3,000, $4,000. So I waited quite a while. I missed quite a lot of upside, but got in with plenty more upside to go, of course.
We want the Fidelities of the world and the, XYZ legacy institution of the world to have Bitcoin offerings instead of, the Celsius of the world and, similar companies of the like. So I think that's just what I'm looking for. It's just like the kind of under the surface growth, hash rate continuing to chug. I think the exchange rate at the moment is probably the least interesting aspect of it, just considering like there's no volatility. We know the story, and we know like that the USD aspect of this BTC USD exchange rate is probably the preliminary driver for the time being. And I think, we're setting the groundwork for whether it's 2024, whether it's a halving, whether it's, a change in liquidity cycle. A lot of these things are somewhat hard to predict. It's all probabilistic. But I think, really just kind of laying the groundwork for kind of the next wave of adoption and kind of the education component. I know that's very cliche, but like even among participants in the industry per se, or people that may or may not have had Bitcoin exposure, there's just an education gap.
Yeah, sure. I think, first of all, the outlook and case for digital assets is stronger than ever. I think the FTX situation proved that. And I know there's a lot of kind of, Bitcoin maxi types that, listen to this podcast. But, I think you have to really appreciate, if you look at a lot of these DeFi protocols, they continue to operate flawlessly throughout the entire, debacle of FTX and all the other major, lenders in the space. And the reason for that is, no one's getting extended unsecured loans off of one phone call, as Kyle Davies said that Three Arrows was able to do. It doesn't matter who you are; you have to maintain the same LTV as everyone else in these DeFi protocols. No one gets any special treatment based on their connections or anything like that, right? And so, a lot of these protocols just operated completely flawlessly. And so, I would say, with that, while at the same time you had all these centralized players blow up, the case for DeFi, I think, is stronger than ever. So that's one thing I would say. And then on Bitcoin specifically, I think the kind of need for, a non-political asset that is for enemies is stronger than ever. I mean, if we look at all the kind of geopolitical craziness that took place this year, you now have countries that are trying to move off a dollar standard, as, the U.S. basically said that they're going to be using SWIFT as a weapon moving forward. That's kind of their big bazooka that they could pull out, and they immediately pulled it out once, the Russia Ukraine situation began to unfold, and kind of showed their cards of, the kind of biggest move that they could make from like a, non-physical, war standpoint. I think that was probably the biggest move that they could make against a country without, physically going to war with them. And so I think with that, a lot of countries, and this is something China's known for a while, as they've stopped buying U.S. treasuries, you can essentially just get completely cut off from your, reserves, and that's what happened in Russia earlier this year, and the entire, financial system. And so I think you have a lot of countries that are probably waking up to the value proposition of BTC over the last year. Wouldn't be surprised if you have sovereign wealth funds or central banks in, developing countries at least, that are probably accumulating some BTC down here.
Yeah, bearish on the first half, because I still think equities, meaning stocks, are still the preferred investment method, meaning that people still think the Fed may not push us into recession. Even if they push us into recession, people are still under the guise that they can rescue us by printing money and lowering rates. I think by the second half, we start to recognize that we're going into a recession in the US, at least, and probably globally, and the Fed can't print money because inflation will remain above 2% for the foreseeable future. So what that's going to do is it's going to force people to say, okay, well, if stocks are not making the money because consumers are not buying their products due to a recession, where is my ultimate option? And that's going to be Bitcoin. And I think, again, once we get regulatory kind of clarity here, that's going to become a big investment option for institutions. You have to note this level right here and then this level right here. So you're going to get into resistance about 0.078 or so. That's where we're just underneath now. And then if you can get through that, you can get a little bit higher. But, to me, again, this is something that's showing me that, yes, it's been a nice run, but again, in a bear market, just be careful. Bear markets are notorious for luring us into being bullish and then kind of taking it all away from us. So again, I just go by the resistance levels here.